You're listening to the Vacation Rental Key with T&T, the podcast for vacation rental managers by vacation rental managers. I'm Tim Cafferty, and I manage two companies, one in Virginia and one in North Carolina. And I'm one of the two T's.
And I'm the other T, Tiffany Edwards, born and raised in the vacation rental business. I help manage our family businesses from Key West all the way to Kauai.
In the next 30 minutes, we're going to give you our keys to success in the vacation rental business.
Welcome back, everyone. We are so thrilled that you decided to listen to this episode because I feel like, and Tim, correct me if I'm wrong, but I feel like every time we get together with all kinds of operators, everyone is asking about how to price things, when to pull the trigger, what are the strategies, and as we look at now Q2 of 2026 and into different seasons, now's the time that those conversations are really hitting a peak.
Absolutely. The last episode, we talked about how to take care of yourself, some personal stuff you needed to do. Now we're going to talk to you about taking care of the bottom line. And we have the guy to do it. Ryan Saylor is with us from Beyond Pricing. Give us a little background. I feel like everybody in this industry knows who you are, though.
Well, first off, thank you for having me. I totally agree. This is a really fun time of year, usually, to talk about what's happening, what's going to happen, what we're seeing on the books. Excited to be here. But for anybody who doesn't know, my name is Ryan Saylor. I've been at Beyond now for almost 7 years. So I started just before COVID, when times were very, very different. I started first with Beyond on our revenue management and data team, building out new markets, and then also helping property managers using Beyond in various markets operate their revenue management strategy. Before Beyond, I was doing pretty much that for hotel franchise operators and also building some revenue management agnostic brand software on the hotel side. And then getting into this industry, I dove further into meeting a lot of people, heading to all the events, eventually took over partnerships at Beyond, which is 90% of our integrations. And then most recently moved over to our marketing team. But I still connect with all of our teams, love talking to operators at every level. We support individual hosts up to people with thousands of properties. And there's always so much going on. The industry is always changing. So excited to catch up on the latest.
Let me just follow up on that. Give us the scope of how many people and what the breadth of Beyond is dealing with.
Yeah. So, I mean, across our user base, we're talking thousands of individual operators and accounts. Again, anybody up from that one listing and they kind of want to stay there, people kind of growing in that mid-market range, and then sort of the larger, more enterprise level property managers too, is really the breadth. And then we really got our start actually here in San Francisco as an operator, and then realized that there was nothing out there on the pricing side, especially compared to other industries. So that's where we started to build out. We were first, so we had to dig through all that data and actually hand launch markets. So we did that first in the US, and then now we've expanded around the world. So we've got customers and users in pretty much every market, every country. We've got employees everywhere, and have grown that way. But yeah, it's been a really exciting couple of years. And yeah, I think at this point we're talking close to 1 million listings connected to the platform, a lot of data to dig into, and a lot of both historical and future trends that we can kind of see on a daily basis.
I love it. And the fact that you started in 2019, that 7 years has seen more change within our industry, especially from a revenue management perspective, than any other time that I've ever known. Take us through what you're seeing as trends just for the Q1 of 2026. And even, I know, Tim, we've talked about this on another podcast, but coastal versus maybe urban or mountain. But what are some of those trends that you're really seeing?
Yeah, great question. And again, this is why I love this point in the year. We've got Q1 behind us, summer's picking up, and we've got great answers and kind of forecasts for what's happening there. But in terms of Q1, looking at the United States overall, I was taking a look this morning at some data. Q1 was up across the board compared to both 2025 and 2024. So we saw a lot of people driving both average daily rate and occupancy, which is great throughout the entire quarter. That even broke out pretty steadily month to month. There was no real standout month driving the quarter. It was really nice and consistent. And I think especially coming out of some of the worry that we saw, a little over a year ago now, back in Q1 2025, compared to that strong 24, this was a reprieve, I think, for Q1 for most US operators. I think the biggest headline on performance and market type really came down to those ski markets and winter markets this year in Q1. I know quite a few individual markets that were hit pretty hard, or not hit pretty hard with snow, I should say, and that caused some of that more last minute travel to not be there. But again, going back to that data, I actually pulled, about 25 ski or just winter classified markets from our database in the US this morning. And while they lost out in ADR for the quarter, they gained in occupancy, and ultimately revenue was pretty flat or up about 1-2%, depending on the market. So you can really see how fast I think most operators have gotten to responding to those types of changes. Winter markets, ski markets are very used to that level of weather shifting demand. And I think they acted pretty quickly to be able to drive some revenue from lower prices and higher occupancy this year, which is always a good thing.
We've heard a lot about shorter booking windows. Folks like me in traditional markets kind of stick our fingers in our ear going, la, 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 but it's happening. And so I think you'll confirm that. But how are people adjusting to this panic threshold, if you will, so rates aren't dropping too early?
Yeah, I think there's a couple different ways. At a high level, again, I checked this morning as of today. In the past year, we've seen those average booking lead times, that booking window drop about 5% for the US. Totally varies by market. We've actually seen some markets where that's increasing a little bit more. So, as a good call out, it's always great to know what that number looks like for your market and your own properties to compare that. It changes every day pretty much. So you never want to rely on, well, we always see bookings 30 days out, because that window is really kind of what should open up your analysis. So if you're used to planning for the next 30 days, but now guests are booking 2 weeks out, you're going to start panicking for the later part of that 30-day booking window. And B, you're not going to be updating your prices or anything like that in conjunction with what the market is demanding. So really, I think when it comes down to price changes that you're making on your own, they have to be within that right window where guests are actually booking in your market. So have that data available and make sure that you're not discounting farther out because you're sort of panicking. You need to see how many eyes are on your properties, how many eyes are in your market to really understand if it's your high prices that are causing people to not book, or if it's just general guest demand booking behavior that's changed.
How sticky do you think that shorter booking window is going to be? Do you think that's a consumer trend that we're going to see and continue to see shorten, or and is here to stay, or is it just 100% dependent on your market and what's going on?
Yeah, I mean, I would say at the country level right now, it's a number that we've seen decrease over the past 4 years, really consistently. I don't have it in front of me, but at least this year versus like 24, for example, we're down closer to 10% on that booking lead time. Totally depends on the market too. Like market in Hawaii, for example, compared to Gatlinburg, going to be very different, especially compared to like a Chicago or Miami. So it's really important to know what's going on in your own market. But I would expect us to continue to see that decrease and probably slow down a little bit overall. But in general, we've seen, given what's happened over the past couple of years, more and more people wanting to book closer and being more comfortable booking closer. That risk isn't really there compared to where it was 5 years ago, 10 years ago.
That said, I'm going to go off script here a little bit and ask your thoughts about consumer sentiment. Right now, gas prices are between $4 and $6 plus, depending on where you are. There's a lot of economic uncertainty, and we don't know what's going to be tweeted tomorrow or said by certain people that will affect the world economy. Do you have any metrics where you can measure consumer sentiment to make sure that we aren't going to get left holding the bag?
I think it's really the question on everybody's mind right now, certainly with everything going on. And really for us, what we dig into is that forward-looking pace data. That's typically going to be for a company like Beyond helping revenue managers and hosts generate their pricing strategy. We need to see what's changing in the future and not rely on the past. So speaking to summer in the US, for example, huge time for road trips, huge time for, people getting out, those summer vacations, big holidays coming up as well. So I took a look at that data this morning as well, and it's looking great. We're not seeing any slowdown in summer demand right now. everything is up. We're seeing actual ADR booked rates coming in almost 4% higher than the same time last year, about 1% higher than 2024, which summer 24 was really strong. We're seeing occupancy really take the lead. At this point, for June, July, August in the US, occupancy is about 11% higher than it was same time last year here in April. So those high level indicators, we're seeing great numbers right now. I think there is a function, especially on if we start talking about jet fuel costs and things like that. There are some ripple effects that I imagine we'll see in the coming months and weeks, just depending on how globally things are shifting. But as of right now, we're not seeing any key indicators that are preventing people from booking right now for summer compared to that usual window in previous years. And the last thing I'll say on that too is we usually also monitor the amount of cancellations that are coming in. So are people starting to cancel some of those bookings and waffle a little bit or change? That is not happening. And I think the shocking stat that I came across this morning, cancellations are so far down this year than the past 2 years. They're about 50% down from where they were in 2024, year to date here in 2026. So we're seeing fewer people cancel, shorter booking lead times. Summer looks great. I don't know if that all sounds like a lie, but we look at all this stuff and I don't see anything yet. Again, I'll check every single day, but fingers crossed this holds for a strong summer in the US.
Tell us more. Tell us more. We
Yeah,
love that. Oh,
no
that's
kidding.
fantastic.
It does make me feel better. We've created a lot more leniency in our cancellation policy, and as a result, have had less cancellations because I think people have the idea that let's go ahead and book it, but there's no real consequence up until a certain point. And I think they feel good about their booking and it encourages them. But going into that 11%, if you dive deeper in that 11% increase, if you dive deeper into that, do you see that there's some winners and losers as it relates to the type of accommodation? So the size, more luxury. We've talked in the past and we've learned a lot, in the last 6 months of this K-shaped economy and the luxury inventory being a dominant player. Are you seeing anything as it relates to that, or is the 11% being driven all across the board, or is it maybe luxury that's driving that?
Yeah, that's a great question. And so we take a look at those breakdowns, and defining luxury is always kind of subjective. So we'll look at a couple things. Typically, you're not really going to find a super rundown 6 or 7 bedroom. Like mostly those higher bedrooms are going to be higher quality. But then we'll look at percentiles on ADR and revenue performance, and then be able to divide just what we're seeing in the market into truly value and quality and luxury represented through price. So just to give you some background, that's kind of how we look at it. Right now, speaking of summer, we are at a point where those larger luxury homes have longer booking windows anyway. So we're seeing most of the growth there, especially when it comes to ADR. I'll say everything's growing across the board, but those luxury larger homes are definitely driving a lot of that right now for summer, peak summer, and then definitely late summer too. But I think when you go back to looking at that decrease in the average booking window, we'll start to see some more of those smaller condo type units start to book up a bit more. But again, we're going to see that much closer to like Memorial Day, for example, in the next couple weeks compared to like summer as a whole. So it's a little hard to tell right now, but I can say that the larger luxury homes are booking up a lot faster and driving a lot of that year over year growth as of right now. But everything's heading in a positive direction. We're not really seeing anything fall behind at that level.
Okay. And if you're scoring at home, that's twice that Ryan has said Tiffany's asked a good question. It's 2-0. Tiffany's in the lead, so I got to up my game here. So let's talk about inventory. You alluded to it before, but I felt the industry was a little stagnant in 2025, but supply seems to be increasing. Well, I guess my question to you is that what you're seeing and has it impacted rates?
Yeah, fantastic question. I wasn't
Great.
prepped
I'm
for
on
that
board.
one, but
We
fly
heard a lot.
overall, it's interesting to look at supply, I think, because it's something that it's become a bigger discussion over the past couple years, and the data I think around it has gotten a lot cleaner and a lot better. In general, we are seeing supply increase. We haven't seen an explosion of supply by any means this year. We can drill down into individual markets, and again, I think this is where your local market knowledge comes into play. are you tracking that year over year? And how can those changes in supply change guest behavior and change how you're falling within that supply? So we're seeing supply increase for sure, but again, not anything wild compared to the past couple years. And then if you couple that with, again, all this great data, Q1 doing well, summer looking great, even with that increase in supply, we're still seeing people kind of figure it out. But even going back to that ski market example, we definitely saw property managers that needed to lower rate compared to previous years to sell more occupancy. So there's supply coming into play there as well. But the key is to have that number available. You're probably going to see it increase for your market in general, but understand where your listings, your portfolio, your assets are falling within that broader supply and play on that without relying on the same market you were selling in last year.
Well, I'm going to pivot because now that now that Ryan's given you an example and talked to you about all of the trends for overall of the industry, I think taking it into how do you apply it within your business. And so as we look at pricing strategy, what pacing signals should operators be looking to assess a slow month, or is it just a consumer change in guest culture that they're waiting to the last minute? Or maybe even looking at large events. What are those different signals that they should be paying attention to?
Yeah, great question. Again, number three for you. I'll say you nailed it with pace data. That is what we're looking at here. If you're looking into the future, looking at pace data is what we want to see. And for anybody who's not up to speed on pace data, that's looking at, all right, if we're looking into the future dates for the rest of 2026, how do I compare apples to apples with previous years? We pull back based on booking date data to what we were seeing at the same time in 2025, 2024. So any changes there are going to give you those revenue management red flags of where I need to pay attention. You can do this for a listing, your portfolio, your market, and basically be able to see, okay, I'm pacing behind. I have fewer bookings than I did at this same time a year ago for this property, for this market, for this condo building, whatever it might be. Why is that? Are your prices higher? Do you have stricter min stay restrictions? So being on top of that data as a revenue manager, that's where I go to first. Where are we pacing ahead? Where are we pacing behind? That's going to tell me where I have room to adjust my strategy to ultimately maximize revenue. So just want to call it out. That's really where I go first. You want to spot within your own portfolio, pace information. That's where you have time to make a change before those days wrap up and you're actually looking at your final numbers. So I would go in and review ADR, occupancy, revenue per available room, or revenue per available night on that pace data and understand how you're performing for the rest of the year to start and understand that. So you might see where you're falling behind and where we're seeing guests book closer to arrival or not book as much right now. So you kind of want to fold in that knowledge of where's your market sitting on that booking window compared to last year. Where's your portfolio sitting? That's going to tell you again, when should you be making changes? When should you be concerned? Is it okay to be a little bit behind pace for September right now if we know that people are booking about 10% closer to arrival and you're going to see that lag? So you always want to mirror that with what you're seeing right now. And then also, if you have access to some of this guest intent data, if you own your direct booking website, look at web traffic. Look at how many eyeballs you're getting on your listings. Try to get that information from a Verbo market manager if you can. Have them give you that info, and it's going to tell you, okay, are we seeing this grow? Are we seeing it shrink? How can I fit my listings to be optimized by how many people are actually seeing that? So that's a couple different ways to get ahead of it. You also mentioned big events, which are, I think, a really big topic for revenue management in this industry. Pretty much always. We've always got a great example here, but you can always boil them down to sort of different categories. And the way that we look at events at Beyond is not necessarily saying, oh, we have this big event that we know of, let's go price it based on it being a big event. We look at the market data. We look at event compression and say, okay, the Super Bowl is coming, but we also know that a bunch of people add on their ADUs or spare bedrooms onto Airbnb. We see supply skyrocket. Tickets are expensive. Ultimately, the market underperforms because we saw supply go crazy. People raise rates not based on data. And it becomes this like wash of an event if you look at historical data. And the same can be said about the World Cup. We are seeing some interesting things for the World Cup in a lot of these markets this year. Kansas City and Houston are really driving quite a bit of demand right now, which is exciting. But a lot of people are thinking, oh, what should I price? I should just crank my prices up. Look at that pace data. You didn't have the World Cup last year. So if you're up 30% in the market, how does that correlate to your listings and your pricing? That's a good thing to look at and good data to check out. So I know there was a lot in there. We can dig more into events, but wanted to call it that. I love pace data, basically.
Well, being a sports nut too, I've looked at some of the schedules, and like for instance in Boston, you have England and France coming, but you also have Iran, Ghana, Morocco, and Haiti. So I'm not sure that that you can go across the board. You really have to look and see, because I'm not sure we're going to get a lot of international travel with the way things are right now. So I just I just think that's very curious what I'm hearing about the World Cup, about not only accommodations being priced up, but the ticket prices are going through the roof. So I'm not sure how good this is going to be. I don't know if you have any thoughts there.
Yeah, it's fascinating, and the match by match dynamics I think are the most important, especially in some of these markets that are going to be hosting quarterfinal matches and things like that, where we don't know the teams. Demand is so low there right now because nobody knows, which is fascinating. So once we're actually in tournament, it's going to be cool to see these markets shift. So I think honestly, if you're using any sort of dynamic pricing tool, I mean, I have my favorites, but as long as you're using something, you're getting some of that event compression pricing. And I think my biggest piece of advice right now is explore ways to stand out. You probably have your price locked down and you know how to move that up and down to make sure you're booked. But in Kansas City, for example, we've got, I think, 6 matches across June and July. 2 of those matches are a day apart. So what I would do is I would have at least a 4 night minimum across those days. You could probably get somebody who wants to go to both matches or be there for both, compared to a match 2 weeks earlier in June where you might be able to get a 2 night minimum stay in there. I don't really know, test it out, but you're not going to push three for sure. So I think playing with some of these other revenue management levers is a way to spread out that demand, spread out that occupancy, while also getting some of those higher prices. The same could be said for cancellation policies. Some people might want to lock in those July dates where we don't know what teams are playing and have a nice cancellation policy. That's always a revenue management risk and gamble, but that's the fun part about revenue management. You're not going to win out in the market if you're not willing to change it up, experiment, see what works, and take some of those calculated risks based on the data.
Cool. Great answer. I want to pivot a little bit and go to OTA bookings, and particularly the OTA badges. So Verbo announced their Premier Host program in January. Many of us, I'm raising my hand, have been chasing that for a few months and having some success. How much do you think that means, those badges and the status, in terms of pricing strategy, or anywhere else you want to comment on that?
Yeah, I think it's great. First and foremost, coming from the hotel space, I used to love these really cool OTA revenue management tools that you could use. I was managing, for example, a Marriott branded hotel. It was always Marriott versus Expedia or whatever, big brand fighting. And I could run promotions on Expedia and I could exclude on a map geographically Bethesda HQ and for Marriott because that's where they were shopping the rates. So they would never be able to shop my discount, and I could fill up the hotel for a slow weekend in 2 hours. That to me is like fun revenue management. It's not just taking up my prices. How am I able to use those tools? And unfortunately, we just haven't seen these OTAs give those kinds of tools to host or property managers without, we want a discount or we want this, yada, yada, yada. So I'm happy to see a lot of it. The way that it impacts ultimately your search ranking on these platforms, I think is really the first thing to go to. I don't know. I couldn't tell you today if you have a badge versus if you don't have a badge, what that difference in price should be. But if you're getting some of those, amenities or different features on these OTAs and seeing your bookings increase, that should always be your cue to try to raise rates. So it should kind of come naturally within your own strategy. And then I think it's important to try out different things. How are you able to measure that impact in your own portfolio? Because regardless, if you're just getting better placement, that's going to mean better bookings. But I think the same could be said for how are your reviews looking? Are you able to automatically decrease your pricing if you get a below average review? That's something that can help save you time depending on what tool you're using without having to be constantly in that OTA distribution world. But I think as we see revenue management evolve with this industry, there is so much more to revenue management than just dynamic pricing. It's going to come down to winning on these channels, utilizing them properly, closing them out during periods of high demand, and really managing that is going to be key. So it's exciting. I don't know exactly how much you should raise your prices, but if bookings follow, that's your cue to ratchet things up for your properties.
That's great. You've given us, I don't know, maybe 10 different keys of things that people should be looking at outside of it's 4th of July weekend and we should just skyrocket our rates, right? And so thinking through that, what are some metrics that you think operators are super obsessed with, but don't really impact or drive the bottom line? Where do they make some of those mistakes? Where are those common mistakes made?
Yeah, I think I see a lot of these coming from owners. Usually, you have that owner that's obsessed with occupancy, and you're like, "Can you see the bigger picture? Do you want to make money?" And that's kind of where I usually struggle
So
with.
tell me, if you're a property manager and you're speaking with an owner who's like that, what would be the conversation you would have with them?
Yeah, I think it's here's your intro to revenue management 101. There's certain ways to handle that, and I've helped out a lot with owner conversations in the past. One tip there that I have is you can always bucket and segment your owners. If you're managing 50 owners, it can be really overwhelming to try to say, how do I give them all what they want? You're going to have those owners that are occupancy obsessed. Maybe they're an investor, they want 100, they want to sell, sell, sell. Then you have people that are like, I will never go below $200. This house has been in the family for 25 years, yada, yada, yada. Then you have people that are indifferent. You can bucket those people, communicate with them in batches, and kind of help your case a lot of this time in explaining why it's okay to have lower prices to get more occupancy to make you more money. So that's typically how I sort of spell that out. And I love showing owners like pacing charts and graphs, comparing them to the market, all of that to give them sort of an intro level view. But I kind of have a hot take answer to your initial question. And I think operators are too obsessed with ADR. And what I mean by that is gross ADR. So we've talked a lot about channel distribution optimization. And if we're just looking at monthly, quarterly, annual ADR as a success metric, are you actually factoring in all of your costs that go towards revenue management and distribution for each of those channels? We know how much we're paying to Verbo or Airbnb compared to a direct channel. Are you breaking that out in your net ADR calculations and seeing where you could optimize further on those distribution costs? That I think is something that isn't easy to get for everybody, isn't possible for everybody if you're not selling on more than one channel. But everybody's talking about, yeah, my ADRs were up year over year. Okay, are you looking at net ADR by channel, for example? Tell me more about that. Tell me more about how you're shifting business away from, OTAs to your direct website, or maybe even increasing some of your hosting fees and distribution costs just to try to get occupancy. That's that next level that I think we need to dig into versus just looking at big shiny ADR number. We're doing well, can we dig into it and look at it by channel and how much you're actually paying to learn more?
Wow. I'm telling you, folks, if you are not taking notes, we can't help you. This is gold, baby. So fantastic. All right. My last attempt at a good question. You've alluded to it. I want to make sure we pin it down, though. What are maybe some underestimated metrics that operators aren't using the way they should, and they should be reviewing that more regularly when they come up with these strategies?
Yeah, I think there's a lot within your own portfolio and then the market that can really tell you what's happening or what's going to happen. I think channel distribution is a big one. So again, can you tell me last summer your business split between direct and OTA even? And tell me what you're doing to utilize that throughout the year. We certainly see different shares of booking volume change for different markets across channels. Airbnb tends to pick up in the summer, slow down in the winter, for example. So that I think is something that a lot of people aren't really utilizing. And then also seeing, if you're not selling on some of these channels in your market, are you missing some of that larger guest audience? So if you're only selling on direct and Verbo's doing 25% in your market, and for whatever reason you're not on Verbo, not that I'm promoting them, but you're missing out on 25% of the bookings in the market. More eyeballs on your properties just means you have a better chance at selling them. So I think looking at that for your portfolio is great. Having that data for your market is really helpful too. It doesn't change a lot, so check it, a couple times a year, see what's happening there. And yeah, I really understand sort of what's going on in your market. The second thing I'll say is alluding to more of that like web traffic data that we're getting more and more of now. We're seeing more ability to pinpoint where people are coming to your website from. So let's say I'm in the Florida Panhandle and I can see my different feeder markets. I could say, okay, here are my primary markets, secondary markets, and I could decide to run a targeted Facebook ad campaign in some of those markets to drive more people to my website. That is where we start seeing revenue management data help out our marketing strategy, for example, and give you more of that boost. So that's also information that is getting to us before somebody makes a booking. Right now, we would see a spike in bookings and occupancy coming in for a random weekend 6 months from now. Maybe there's an event going on. We don't really know. If you can get one step ahead of that and see people spiking in searches or spiking for amenities or different areas of your market, you can get ahead of when they actually start booking and start to assess and prepare your strategy ahead of time. So I'd say between those two, I would dig a little bit further as a property manager today. But it's a really exciting time to be in this industry, especially within revenue management. There's so much changing, there's more data, more tools, more people talking about this than ever before. And I think we're going to see those top revenue managers really excel outside of just that pricing piece. You can't just keep digging in pricing. You got to get comfortable with promotion, distribution, marketing, and probably a bunch of other stuff that I missed today. So yeah, lots there to dig into for everybody listening.
Well, I'm gonna let Tim end on his great question, and I don't know what the tally was, like to get to know Ryan just a little bit more. So, what we like to do with a few of our guests that come on, we like to have a rapid fire. So, are you ready?
Yes.
He's either tensing up or giving a sigh of relief because the tough stuff's over or the tough stuff's about to start. Somebody start a clock somewhere.
Yeah.
So, by the way, you can answer in a few words or more wordy if you like, but this is how we try to get to know you a little better. So, you're a proud Boilermaker from Purdue University, hospitality and tourism management, if I remember correctly. How many times did you survive the Breakfast Club?
Survive is the key word here. Survived maybe twice, full survival, but I died quite a few times at Breakfast Club.
Okay, give them a quick explanation what the Breakfast Club is for those who don't know.
Home football games, Purdue. The bars open at maybe 5 a.m. Everybody gets out there early and you dress up in a Halloween costume. So you had to come to every fall semester with about 10 to 15 full out Halloween costumes. And you go out, you have some breakfast and hang out with friends before the game.
Well, my question is real lame compared to that. I always ask because it's personal for me, because I want to learn. What's one way that you use AI every day that you could not live without, that you personally use it?
Ooh, personally, honestly, like grammar and syntax. It's like that low hanging fruit that I think I write good emails and good text messages, but then it suggests something and I'm like, ooh, that sounds so much better. So it's not writing it for me, but it's coming in afterwards and saying like, swap these two words. And at this point, I couldn't live without it. My online personality would change quite a bit if I had to get rid of that.
What's your favorite song or favorite artist?
Ooh, great question. Favorite artist? Yeah, we're in the final rounds here. I'll go favorite song, I Will Always Love You. Favorite artist, Dolly Parton.
Nice.
Wow, very nice. Up in the game. Okay, I guess I have to ask then, what's your favorite vacation spot?
Favorite vacation spot, I'm gonna go with Kauai. I'll take the entire island of Kauai as my favorite vacation spot. Dreamy.
Where's your favorite restaurant then there?
Ooh. Okay, it's gonna be a poke place in the Princeville Mall. I forget the name. I think it's called Poke something. I'll know it when I know when I see it.
The one overlooking the water.
That is beautiful, and I did have dinner there in February, but you don't gotta go. You don't gotta go far or expensive for good food there.
No.
All right, Ryan, you're scanning channels on the TV. What's that show or that movie that you've seen time and time again, but you stop and watch it for the 15th time?
It's gonna be diners, drive-ins, and dives. I'm watching the whole episode. I gotta see what's out there, and there's always something new because there's probably about 10,000 episodes.
All right. What is one example of, because before working with property managers or owners, that you've gone, oh my gosh, I can't believe they did this with revenue management?
Ooh, we were doing a booking review. This was a large property manager on a lake, and it had been a tough couple weeks. We were dropping prices, things were not looking good. This was back in 2019. And I go, this can't be me. It can't be my prices. I go to their website. I had just started working with them a couple weeks before. I go to their website and I search just to make a booking. And I said, I want this area. Here are my dates, 10 people, plug it in. I got the search results page, all these beautiful properties, some amenities listed there, yada, yada, yada. No prices on the search results page. So I was like, that's why we're not getting bookings. You have to click into each one to get your price estimate. So I was like, hey, suggestion for you. Check this out. Let's get our prices on there, and bookings shot back up. So
That's a great key, though. You should always try to shop your own listings, your own properties to see what the user experience is. I like that.
And don't start on your website. Go to Google, like pretend to be a guest. They don't type in property managers in Panama City Beach. They go for like where to stay in Panama. Like go to that top of the funnel and try to head down to your properties, and you'll find things that you can or should tweak and test out before even people get to that calendar.
Still teaching us right here at the end. Okay, my last one. What gift or talent do you not currently possess that you wish you had?
Probably playing piano. I would love to impress people. Right now, I wouldn't tell anybody. I would just pull it out maybe once a year and be like, "Oh yeah, here it is." But I couldn't do it today.
Just learn one song, "I Will Always Love You," and you'll be good to go.
Hey, as long as I don't have to sing it, then we're okay.
All right, my last one. If you weren't in revenue management, what would you be doing?
I believe that I would be a chef. My father is a chef, and I was going to go to culinary school. My parents were like, "Oh, are you sure you don't want to go get a degree?" So I went to Purdue for hospitality, and I was going to go that restaurant track, and then I found hotels, and I remember the first day I learned about revenue management, and now here I am. So I think if I went that other path, it'd be the chef route for sure.
There you are, sure enough. Well, Ryan, as usual, you win nothing but our undying appreciation for playing our inane little game. That is
Love it.
Ryan Saylor. He is the director of product marketing for Beyond, and we really appreciate you being on here. So insightful, so many keys for our audience today, and we thank you again.
Thanks for having me. So many great questions all around from you both.
And Tiffany won, by the way.
Yeah, it was close.
Well, until next time, guys, we appreciate you listening in, but you may have to listen to this one twice because there were so many great takeaways. So we'll see you on the next one.
So long, everybody.